time to do business. Again, welcome to Business Incorporated. And for this episode, here's what we have prepared for you. We're counting the losses with UNCTAD. The tariff war is still on. And Egypt is increasing their fuel prices by as much as 15% to access loan from IMF. Just like Nigeria, Kenya is regulating digital assets now with a new crypto bill. Good afternoon, everyone. I'm Ini John Mekwa. Let's do business. Oil prices were stable on Friday, but on track for their second weekly loss in a row against a backdrop of investor concern over the burgeoning trade war between the United States and China. So we see Brent down 3 cents, that's 0.05%, at $63.30 a barrel. WTI is on the flip side this afternoon. This is not what we had in the morning. So we see a gain there. So it's up to $60 now, 9 cents. Brent and WTI are poised to register weekly declines of 3.5% and 3% respectively, having both lost about 11% each last week. Brent dipped below $60 this week at some point, and that's the lowest since February 2021. President Trump this week paused heavy tariffs against dozens of trading partners, but a prolonged dispute between the world's two biggest economies is likely to reduce global trade volumes and disrupt trading routes, weighing on global economic growth and reducing demand for oil. The U.S. Energy Information Administration has lowered its global economic growth forecast and warned that tariffs could weigh heavily on oil prices. It's reduced its U.S. and global oil demand forecast for this year and next year. China's 2025 economic growth is expected to fall relatively below what it was thought to be even before now. And in metals, gold breached the key 3,200 pounds level for the first time to scale a new peak on Friday, fueled by weaker dollar and an escalating trade war that has sent investors rushing towards safe haven. So we see for this afternoon looking very green, building on what we had in the morning, 1.3% up for spot gold, $3,216.48. US gold almost 2% up. $3,236 is what it's going for per an ounce. And spot silver is on the flip side, 0.2% down, $31.13. Palladium, platinum, I beg your pardon, is also down, 0.4% down at $934.20. Palladium has gained 0.7% to settle at $914.70 per ounce. At this time, the dollar dropped, the dollar index dropped, making greenback price bullion, which we see the metals cheaper for overseas buyers, and so we saw, of course, a lot of them go. Their major stocks indexes also fell after President Trump talked about 145% tariff on China. Of course, China is meeting up with that. Theirs is 84% on U.S. goods. Apart from tariffs, central bank demand, expectations of interest rate cuts by the Federal Reserve, geopolitical instability in the Middle East and Europe, increased flows into gold-backed exchange-traded funds. That also fueled the prices that we see. We're expecting U.S. consumer price. It fell yesterday. We saw that yesterday, even though for food, it didn't really go down. But there are more data expected at the end of today. I think that's with the producers' price index. Now, here in Nigeria, as the federal government considers removing electricity subsidy, Nigerians are asking what impact that will have on them. The Managing Director and Chief Executive Officer of Kensington Energy Limited, Mr. Chukwuani, believes that the government should provide a value chain to balance subsidy between the consumers and the retailers.
Electricity subsidy comes in basically at the last mile. which is in terms of, instead of passing the full tariff on the consumers, part of that tariff is taken upon by the state in terms of the tariff. Like today, if you look at the band B tariff, you will agree with me that that band B does not even cover the cost of the energy generation, which is hovering between 110 to 125. So it means that those in band A are actually, to some extent, subsidizing those in band B. And the government, to some extent, is also subsidizing the entire sector by ensuring that these full costs are not passed to the consumers. However, one of the things we're also looking at, another way of this, the subsidy comes in the sense that you have the hydro, which comes at one of the cheapest in terms of pricing. So the hydro comes at the very cheapest in the pricing, and when you consummate the hydro generation together with the gas generation and other forms of energy mix like the solar and all that, the government is able to use the pricing model coming in from the hydro to provide some kind of balance in terms of pricing.
The National Assembly Caucus of the Northeast is lamenting the exclusion of the Northeast region from Special Agro-industrial Processing Zone of the federal government, despite what it describes as its enormous agricultural potential cutting across all sector value chains. Addressing a news conference after an emergency meeting in Abuja, the chairman of the caucus, Senator Danjuma Goje, says that the Special Agro-industrial Processing Zone's aim is to transform Nigeria's agricultural landscape through innovation, private sector investment, and strategic public partnerships. But sadly, the region is being conspicuously missing from the list of states allocated the processing zones.
It is against this backdrop that we are extremely worried that our zone is excluded completely from the SAPZ program, regarded as a presidential priority project and a direct response to long-standing challenges facing Nigeria's agricultural value chain, including poor infrastructure, limited access to markets, and low value chain addition. So, gentlemen of the press, at the end of the meeting, we resolve as follows. According to the president of the African Development Bank, Dr. Akinwumi Adesina, Agro-industrial zones program was mooted during his tenure as Nigeria's Minister of Agriculture over a decade ago. Lament the exclusion of the Northeast geographical zone from the processing zones, despite its enormous agricultural potential, cutting across all sector value chains in the country. 3, appeal for the immediate inclusion of the Northeast geographical zone, the Special Agro-industrial Processing Zones, SAPZ. This is not only for fairness and inclusivity, but for the actualization of the lofty ideas of the present administration to industrialize Nigeria's agricultural sector and create sustainable jobs in the country.
The United Nations Assistant Secretary General and UNDP Regional Director for Africa, Ahuna Eziakonwa, has made an official visit to Channels Television, meeting with the Chairman CEO of Channels Media Group, Dr. John Momo. They both discussed the role of African media in controlling the narrative of the continent's stories. She extols leading role by Channels Television in becoming a source of credible and reliable information from the continent to the diaspora. In an interview later, she emphasized the need for African leaders to re-engineer their economies to benefit its people. The issue of the ongoing trade tariff among Western worlds was also an issue and a topic for discussion with our correspondent Amarachi Ubani, and of course the impact it could have on African economies.
what is happening now globally, it's a wake-up call for Africa, because what's making achievement of the SDGs that much more difficult? Yes, there was COVID, and yes, there's been a lot of financial turbulence, but the fact that we have not been able to go beyond aid to really prioritize things like structural transformation that allows us to add value to our raw materials, so that Africa is not just exporting raw materials rather than creating industries that will create jobs. That's one that needs to be addressed urgently. And the current tariff situation pushes us even harder, because you can't just be an oil economy anymore. The volatility is too much. You can crash any moment when the prices go down. So you have to be forced to look at the non-oil sector. And that forces you as a country to then say, where are the investments that we need to industrialize, to do a little bit more manufacturing?
And we're staying on the tariff now to find out, among other things, the costs of it to global economy. Of course, we've heard the views of the World Trade Organization. Now let's talk to the Director, International Trade and Commodities at UNCTAD, obviously United Nations also. That's Ms. Luz Maria de la Mora, joins us virtually, obviously, from Sweden. Thank you so much, Ms. Mora, for joining us. I think the first thing will be, we've heard the warning from WTO on the impact, both already felt, we see the drop in oil, and also the one in the future. What does UNCTAD see as the cost of this trade war?
Yes, well, thank you for having us today. We at UNCTAD here are concerned about this tariff escalation that we're seeing. Basically, the most important concern that we have right now is the uncertainty that these kinds of policies are creating for global trade and its implications for the global economy. But most importantly, here at UNCTAD, we are concerned about the effects that this may have on small economies, vulnerable economies, least developed countries. And we are concerned because trade is a source of economic growth. Trade is a source of job creation, and trade should be a source of stability. And these tariffs are creating uncertainty to the global economy.
So that uncertainty, well, is supposed to at least be paused for 90 days following the announcement by President Donald Trump. But the fact that we have the two of the biggest economies in the world ongoing, even with this 90 days, I wonder if that makes any difference at all.
Well, I think this is a good opportunity. This 90 days is an opportunity, especially for small economies, for African economies, for developing countries, in order to assess multilateralism and to reinforce the message that international trade rules are essential for trade to take place. There has to be recognition that rules are the way to go. Unilateralism is creating this uncertainty that we have seen these days. And countries should take this opportunity as a moment to come back to the system, come back to the rules, and reassess that the only way in which we will be able to overcome this uncertainty is by sticking to an international trading system that offers predictability and certainty through rules.
So do you see this action, proposed action by nations within this 90 days, do you see it creating new trade routes, new trade partners? Can some country do without the others?
Well, there are always opportunities to create new trading relationships. But I think that the most important thing right now is to, on one hand, make sure that we continue to trade within multilateral trading rules. And also, we have the opportunities to see what are the areas that, for example, regional trade agreements like the Africa Continental Free Trade Area can offer to its members to deepen integration, but always taking into account that rules offer certainty. They offer certainty to investors, they offer certainty to producers, and to those that import and export. And most importantly, we know that we have an international trading system that for some time has tried to be reformed by its member states. We know that what we have today is beyond perfect. We know that it has shortcomings, but I think that this is also a moment to realize that we have to move forward with probably new rules, with new ways of promoting integration, but through multilateralism.
So you talked about AFCFTA, and that has been on for a bit, but it does seem like African countries are unable to maximize the platform and the opportunities there. What would you say the African continent is missing in maximizing the AFCFTA?
The AFCFTA needs to have a long-term vision. Investments take time to reap. Trade takes time to build. Value chains take time to build, but we need to keep a vision. And the vision has to be there. The vision has to be through trade, we can promote investment, we can create new market opportunities, we can create new jobs, and we need to go and continue through the same path, the path of certainty and the part of predictability. And this gradually here at UNCTAD, we have done different kinds of analysis, and we have seen that AFCFTA has a potential of creating more than $7 billion in trade among members. It also has the potential to reduce the cost of doing business among the members of the AFCFTA because it offers transparency on what are the rules and regulations that goods and services have to comply when entering other markets. I think that we should not lose the pathway that AFCFTA has decided for Africa, and we need to deepen the way forward.
All right, so if you were to advise African leaders about AFCFTA at this time, in the midst of all of this, seems a new normal is building up and all of that, what advice would you give them? What priority should they, follow up first to maximize this period, maybe on the platform of AFCFTA?
Well, our advice from UNCTAD would be stick to the rules that you have negotiated. Do not deviate from what you have already offered to the business community. Support the small and medium-sized companies. Be inclusive to try to integrate as many companies and groups into trade, and develop supply chains within your region. We have seen that regional trade and trade among neighbors has a huge potential for economic growth, job creation, and also for development of supply chains within the region. And that has a very long-term capacity to endure and to be able to face other kinds of challenges that come from outside the region.
I guess over time, if Africa is able to develop from within, it will be easier, to have trade partners from outside the continent. I guess by then they'll have developed products, developed routes also to be able to communicate with, other countries.
Right. We have seen that regional integration is an easy and straightforward pathway for creating these kinds of trade relationships. And sometimes what we need is only to identify the complementarities among different products in sectors. And let me offer you an example. In the fisheries sector, sometimes we feel like we all sell fish. Yeah, but there are different kinds of fish And there's a supply chain that where one sells shrimp, the other buys lobsters, and the other one could buy clams, to give you some examples. So that is a complementary industry that has a huge potential for developing small communities of fisheries. And from there, once you have established a supply chain among countries that are neighbors, then you are strong enough to be able to go abroad or to expand in the African continent.
We look forward to those days coming. Thank you so much. Director, International Trade and Commodities with UNCTAD, Luz Maria de la Mora, beg your pardon, Luz Maria de la Mora. Apologies for that. And yes, you're joining us from Geneva, Switzerland, and not from Sweden. Thank you so much for shedding some light, especially on the African trade route and what Africa can do at this time.
Our pleasure. Thank you.
All right, so that was UNCTAD, and yes, she's joining us from Switzerland, Geneva. Let's take a break now. When we come back, we'll head to the markets and see what's happening there amidst all of this. Still on Business Incorporated. Please stay with us. Welcome back. Still watching Business Incorporated here on Channels Television. Time to head for the market now. It's a bit of green, at least for the NGX. Let's celebrate the little victories. We're heading close to 105,000. I wonder if we can get there by the close of trade today. But intraday, it's 0.03 in the green. South Africa is also up almost 0.5%, less than the 89.90, which it is surged to some time ago, but now at 86,398.69. And then we see other parts. Egypt, for instance, is also positive, 0.01. It closed yesterday, 2.43 at 30,812.70. Kenya is also positive and looks really good at 1.75. Now let's stay here for a bit. We have Paul Kamau, investment analyst and partner at Final Tours, to talk about Kenya. Hi, Paul. Good afternoon and welcome to the program.
Good afternoon, and thanks a lot for inviting me here.
So tell us, how much impact has the tariff war affected investors in Kenya's stock market this week?
Well, it has been quite on the red the first few days. That is the last 3 days until yesterday, when you start seeing the signs that the stocks are now going to the green. But of the execution of the tariff and the 90 days moratorium that had been placed. But yes, there was a lot of effect on this because the foreign investors which were instrumental to the stocks.
So what about the domestic investors? Which way are they looking?
For the domestic investors, what has happened is that some days before, there was a bond that had been issued. And so there was a bit of competition with the bonds where we found that the bond market had been oversubscribed. The government on last week had issued a paper which was oversubscribed and was a long-term in nature. So the domestic investors, they'll be picking there, but they're also, in as much as they would like to go to the equities, there's quite a lot of activities on the bond market. That's the local bond market.
Okay, interesting. So back to the stock market, what sectors are most attractive over here in Nigeria? I mean, the financials are the most liquid and most attractive for a lot of investors. How was it like in Kenya?
In Kenya, how it's structured is that nearly 50% of the stock exchange is controlled by Safaricom. The Safaricom are about to release their end-of-year results in a month's time. So there'll be a lot of influence of the movement of the stocks there. But at the moment, there are a lot of stocks movements. They are on financial sectors, that is banks and insurances. Actually, they are just by last week, that's when they finished releasing their end of year results, which were ending on 31st December. And most of them were profitable, and it has really pushed up the stock a bit higher up because they are big enough, they are sizable.
Yeah, it does look like the network from there, Paul, is not very stable. Maybe you should put off your video. I think that might help stabilize that network a bit. At least we can have your audio. So let's try that and see how's the market? I think the market is closed at this time. How did the market closed in Nairobi?
Yeah, today they're just about to get the final results, but all the indicators that the counters today, they were on green. So they were able to go up. So today it was the market, a lot of security counters gained a lot.
So do you expect this positive sentiment to spread to next week since today is Friday?
Yes, we'll be optimistic cautiously in next week because the shillings is stabilizing, and we feel that what has happened now will continue, and more positive corporate results will start trickling in case of any financial institution that has not declared the results. So yes, we'll expect to have a lot of same kind of movement coming next week.
All right, Paul, thank you so much for taking us to Kenya and find out what's happening in the market. Paul Kamau is investments analyst and a partner at Finaltos.
Thank you a lot.
Well, we're still staying in Africa to find out, other markets. Let's see, for instance, head to the Middle East and see there's two markets that trade on Friday in the Middle East, Abu Dhabi and Dubai. And intraday, we see them in the red, 9,123.59 lost. Well, minute there, ignorable, I guess. Dubai is, however, more than that, 0.31% in the red, 4,958. Then other markets are not trading today. Saudi and Qatar, they closed in the green, 11,502, as well as 10,095. Moving over to the United States, where stock futures rose on Friday. Traders are weighing the latest developments at the tariff front. It's been a tariff-full week as usual. So we see the numbers right here for the Dow Jones. It's green, 0.64%. At 40,052. S&P is also green, comfortably green, 0.81%, 5,344.75. NASDAQ is also green. A lot of recovery we see there. Seems the battle between US and China is not moving investors so much, at least at this time. That's what we see. So NASDAQ is also green, 0.95%. That's huge, close to 1%. 18,659.50. Tariff fears still remain on investors' mind after, of course, that temporary hold on reciprocal tariff, but a more aggressive movement with China. So, well, this is the features. Let's see how the market fared at the close of trade on Thursday with our correspondent, Maria Bird. Well, it looks like we're having a bit of a technical there with Maria, unfortunately. Let's go to the Asia market and see what's happening there. And we see it's, mostly red. Nikkei is red, down almost 3%, 33,585.58. The Kospi is also red, 0.5%. 2,432.7. The Hang Seng escaped that, 1.13 in the green at this time. Let's see other parts of the market. The Shanghai is red. The Nifty is also in the red at the green at this time, 1.92%. So at least we see India recovering, even though they have passed this level before. Of course, we do know that. But I mean, looking at all that's happening with the sentiment and the tariff, I guess India is just happy to still be back on the 22,000 level, looking at the market at this time. Well, that's it for the market. Let's see Africa and see what's happening in other parts of Africa. We start from a not very good news from Egypt. Yes, Egypt has to swallow a very bitter pill in the coming days. Beginning from today, they've hiked prices of a few products by almost 15%. That marks the first increase in 2025 as the government seeks to reduce fuel subsidies as required by the International Monetary Fund. They have to access about $8 billion support package, and this is one of the conditions that they've been given. The increases of between 11.76% and 14.81% on the wide range of fuel products come almost a month after the IMF approved the disbursement of $1.2 billion to Egypt following completion of the fourth review of its loan program signed last year. Egypt has taken on back-to-back financing facilities with the IMF since 2016 when it agreed to a $12 billion loan program to resuscitate its economy after years of political turmoil since the Arab Spring protests began. We're still in Egypt. Well, before that, they had a bit of good news, the relief of their core consumer price index, that's the CPI, that declined to 9.4% in the month of March, down from 10% in February, according to data released by the Central Bank of Egypt. On a monthly basis, CPI inflation slowed to 0.9% in March compared to 1.6% in February and 1.4% in March. The drop in inflation suggests a gradual easing in price pressures from following months of elevated levels driven by currency fluctuations and global economic. But I wonder what the trend will be like by the end of this month. You know, with this increase in the price of fuel prices, energy and transport will largely be affected, you know, and we should expect an increase in their CPI by the end of April. Still in Egypt, the country expects to harvest 10 million tons of wheat this year, up from 9 million in 2023, driven by improved crop yields and ambitious land reclamation efforts. This is according to the Agriculture Minister, Alao Farouk. He said that 3.1175 million fedans, that's about 1.30 million hectares, have been cultivated this season, and that's slightly lower than the 3.5 million announced earlier by the Planning Ministry, and 3.2 million fedans in 2024, suggesting a possible decline in total wheat area. The government plans to buy 4.5 million tons of local wheat and import about 6 million tons to provide heavily subsidized bread for over 69 million Egyptians. And we know that bread is a staple food for Indians. And then we head to Zimbabwe, where the thrust to improve currency and price stability continues to gain traction as foreign currency reserves backing the Zimbabwe gold have increased to over $600 million. The Reserve Bank of Zimbabwe revealed that by the end of March 2025, the country's foreign currency reserves had risen to $600 million, and that's a significant increase from approximately 270 million recorded at the end of April last year. The central bank confirmed that the current reserve levels are sufficient to fully cover ZIG Bank deposits, providing a critical buffer for the local currency against foreign currency volatility. From Zimbabwe, we head to South Sudan, where the government has earmarked up to 60 billion of local currency to support farming activities as the rainy season approaches. Ms. Lily Albino, the Deputy Minister of Agriculture and Food Security, and also the spokesperson of Economic Cluster, says the meeting will focus on fast-tracking development priorities, with agriculture and food security taking center stage. ACOL says that the funds aimed at revitalizing agriculture and fortifying food security signal a renewed commitment to harnessing the nation's untapped potential in cultivation and empowering rural communities. She revealed that the cluster formed a special committee to prepare for the National Agricultural Conference, a landmark event that will bring together stakeholders to unlock investment, generate innovation solutions, and drive transformation within the agricultural sector. Let's take a break. When we come back, we'll head to Berlin, see what's happening there, and then, of course, there's the crypto and all the stories to stay with us here in Business Incorporated. Welcome back. Still watching Business Incorporated here on Channels Television. Well, data is a new crude. We had that conversation some days ago with the CEO of RAC Center. Well, now they have officially launched that center. It was launched by the Lagos State Governor. And, well, this is the report.
This magnificent structure is housing the newly built state-of-the-art LGS2 data center, sitting on 6,000 square meters of land space. It's the commissioning of an AI-enabled data center, and guests present include Governor Babajide Sanwo-Olu, represented by his Deputy Chief of Staff, Chairman of the Jago Group. The chairman says with the new structures and equipment in place, the company aims to ensure that uninterrupted energy, which is efficient and world-class, survives.
For over 10 years, we have set the benchmark for excellence in data center infrastructure. Our new facility reinforces our commitment to absolute reliability and robust security. We aim to ensure uninterrupted, energy-efficient, world-class services and provide scalable solutions for enterprises, cloud providers, and financial institutions.
Governor Sanwo-Olu's Deputy Chief of Staff, in his speech, notes that commissioning of the data hub will usher in new investors into Nigeria.
The data center industry is a catalyst for growth, creating jobs in various sectors from construction to IT services, to financial services, and so on and so forth. By investing in such advanced technology, we are attracting investors from across the globe who see Lagos not just as a city, but as a hub of innovation and digital transformation.
The Chief Executive Officer of RAC Center, in his address, assures clients and consumers that their data is fully secured.
This is a very secure environment. It's protected in 10 layers of security access, because what we store in this facility is the new gold, the data and the data integrity of our clients and our consumers. This is therefore Tier 3 certified. It is a complete autonomous power generation that makes sure that the integrity of the data is always protected, 24/7, every single day.
It's the belief of management of the RAC Center, government, partners, and other stakeholders that Nigeria, and indeed the West African sub-region, will experience better data availability as this AI-enabled center is opened for operations.
All away from the digital world, in a bid to boost its economy and agricultural potential, the Cross River State government, in collaboration with the African Development Bank and the federal government, has flagged off the establishment of a special agro-industrial processing hub in the state. Speaking in Tinapa, Calabar, the venue of the groundbreaking ceremony, the governor explains that the hub will enhance agricultural productivity, improve food security, and empower local farmers, while the president of the African Development Bank, Dr. Akinwumi Adesina, reaffirms the bank's commitment to supporting inclusive agricultural transformation across the continent.
Today marks a watershed initiative by my administration in establishing the renewable resource base of the state by fully utilizing agriculture and its multiple value chain. It is an incontrovertible fact that the extractive industry which embodies oil and gas exploration, quarrying of solid minerals, mining of rare earth minerals, etc., has a definite quantum to be extracted before it's exhausted. What is left behind includes dry oil wells and deep craters in mine sites. But the arable land with bumper yields that accompanied agro-business remains renewable every passing year, defying depletion. This is the wonder nature holds in store for human beings to live and also to thrive. This paradigm shift from non-renewable to renewable resource base also holds the key to the prosperity of many nations. Hence, an imperative to join the League of Subnationals in Nigeria that adopts agriculture as the mainstay of its economy. For us in Cross River State, the establishment of a cluster of smallholders farmers in staples and cash crops, such as rice, cassava, millet, cocoa, oil palm, etc., across the state is a right step towards the agro-industrial revolution. Besides, the farmers are engaged in mechanized agriculture. Since the financial resource that accrued to the state is negligible as compared to the requirement for the establishment of both the special agro-industrial processing zone and the agricultural industrial hub, there is need for the private sector partnership. To this end, the African Development Bank, in collaboration with the Federal Ministry of Agriculture and Food Security and the government of Cross River State, have found a strategic tripod team to drive these projects. The deliverables of the envisaged projects are food security, diversification of the state economy towards export-oriented trajectory, and increase in the state gross domestic product, our GDP.
I am delighted to be here today for this landmark groundbreaking ceremony for the development of special agro-industrial processing zones in Cross River State. I wish to congratulate you, Your Excellency, Governor Bassi Otu, for your incredible leadership, vision, dedication, passion, and tenacity that have led to this historic groundbreaking for the development of the special agro-industrial processing zone in Cross River State. 2 days ago, I was together with His Excellency, Vice President Kashim Shettima, and Governor Uba Sani in Kaduna State as we did the groundbreaking of the special agro-industrial processing zones for Kaduna State. And here we are again today in Calabar to do the same. How exciting. We are on a journey of good news across Nigeria. It is indeed the beginning of a new dawn. The special agro-industrial processing zones is bringing good news to Nigeria. State governments and local governments. Good news to farmers, agribusinesses, and all rural areas of Nigeria. Good news of jobs and wealth and prosperity with agriculture as a business. I wish to commend the federal government of Nigeria under the able leadership of His Excellency President Bola Ahmed Tinubu for the strategic partnership that we have together with the African Development Bank for the development of these agro-industrial processing zones in Nigeria.
And from there, we head to Berlin. We're in a week dominated by U.S. tariff talks. One major headline in Germany is the formation of the new governing coalition. Yes, Germany will be getting a new government soon, and they've released the proposal that points to the major changes the incoming administration will make. Well, let's look closely at that with Vada. Vada Imran joins us from Berlin. Hi, Vada, good to have you on the program. So you should have a new government soon. What are their top priorities at this time?
Thanks for having me, Ini. I'm happy to be here. And as you know, it has been a whirlwind of a week for the news cycle. And a major development here in Germany, like you said, has been that the two main parties, the Christian Democrats and the Social Democrats, have agreed to a coalition deal and will be leading the country for the next few years. Now, this coalition document includes a host of big, impactful changes. Let's start with their new potential trade policy. So the new government will be looking to achieve a free trade deal with the U.S., at least for a medium term. It is one of their main goals as the new alliance to avoid trade conflicts with the U.S. It's a top priority to avoid any trade wars or tariffs and actually turn their focus more towards implementing trade agreements with other regions like Latin America, for example. On the climate front, we're also going to see big changes. It seems that the new government will be looking to increase gas power plant capacity and abolish a controversial and crucial law that was meant to help phase out fossil fuels. So we're looking at big changes. And then what everyone's asking is what's their priority for workers, like for labor here? And well, they're promising an increase in minimum wage, which was always welcome news here, tax-free overtime pay, and an overall reform of unemployment benefits. And what that means, we're just going to have to wait and see. There's also a radical change of approach to migration, including potentially stopping asylum seekers at borders and restarting deportation of people to Afghanistan and Syria. But it really depends on when these measures are implemented or if at all.
Yeah, well, sounds like a lot, but economic institutions in Germany have further decreased the country's outlook, talking about the economy. And I'm sure this will also form a part of their concerns and priority.
Absolutely. I mean, this was kind of expected, but the timing of it was quite ironic. You know, one positive news that a new government is going to be formed is then totally shadowed by another news, this gloomy forecast from leading research institutions here. And it's a big downgrade, by the way. Earlier, their prediction was that the economy here would grow in 2025 by 0.8%. But now this has been slashed to a mere 0.1% growth for Germany for this year. And this is attributed partly to these new U.S. tariff policies. You know, these levies on cars, aluminum, steel. This is going to cost this economy a lot. And this puts Germany in big danger for a third consecutive year of stagnation and even potential recession after a 0.2% drop in GDP last year. So simply put, things are not looking good. Berlin is the only G7 economy that has contracted for the last 2 years consecutively. But the new Merz-led government is looking to provide some kind of stimulus to this economy. However, this report from the Economic Institutes paints a picture where unemployment will edge higher this year before it eases next year, and inflation will also, unfortunately, sit above 2%.
Yeah, and all of this is compounded, you know, by the tariff that is going on. We just have a relief of 90 days. But looking at the Merz Chancellor now, Chancellor in waiting, sending to allies, what message is he actually sending at this time in the midst of this to his allies and to the rest of the world?
Well, at the press conference announcing the coalition agreement, Friedrich Merz, the chancellor in waiting, was all smiles. It was probably one of his best days, to be honest, and he seemed to have a lot to say to the world. My colleague asked him what his message was for Donald Trump, and he said, and I quote, "My message to Donald Trump is Germany is back on track, and that Germany is willing to strengthen its competitiveness, and not just in the country, but he's looking to strengthen the whole EU." So he's being diplomatic by saying that, and also indicating basically yesterday that he will travel to Washington, D.C. very, very soon to meet Donald Trump. And this news, unfortunately, had no time to have a real impact on the markets here because the whole week was dominated by this tariff roller coaster. And so still the DAX is currently at 1.4% in the red. This morning, it actually started off quite okay and had some gains. And then it dipped drastically. And this was due to the latest announcement from Beijing about tariffing U.S. products a full 125%. And it's having a ripple effect in economies all over the world and also here in Europe.
Well, I guess we'll have to wait and see how the market closes, and then perhaps we'll have a bit of reprieve by Monday. But thank you so much, Vada, and do have a great weekend.
Thanks so much, Ini.
Well, talking of reprieve, it seems that the crypto market is having a bit of that because we see the color green right there, and we see BTC at 82,281.45. It went up to 83,000 at some point today, but I mean, it's still positive. This is what we have to live with. Ethereum has, well, increased a bit better than what we had at this time yesterday, but we see it in the red now. It's also shed off some of those gains as XRP and all of that. We have a story from Kenya that it plans to regulate digital assets with the introduction of a new crypto bill that's aimed at optimizing customer experience. And following this announcement, Kenya is set to introduce its first comprehensive legislation that's aimed at regulating the overall cryptocurrency sector through the use of a newly proposed virtual assets service providers bill. It sounds close to what Nigeria has just done, the ISA, which also recognizes virtual asset. But let's talk to Adeni Yolo-Okporoku, a crypto evangelist now, to find out his thoughts on this. Hi, Adeni, good afternoon and welcome to the program.
Good afternoon and thanks for having me here.
So it seems that African countries are waking up to the need to regulate crypto space.
Yes, I think this is a development long overdue. We've seen that many people see the benefits of regulating cryptocurrencies. There's really no need allowing the best brains in the crypto industry in your country to move to places like Dubai that has been receptive of crypto knowledge. And I think it's a smart move by the Kenyan government to put in laws to regulate cryptocurrencies because Kenya is becoming the hub. I know of so many of my Nigerian crypto colleagues that have moved to Kenya in a bid to have a better regulatory ecosystem for their products.
But Nigeria still seems to have the leading investors in the community, in the crypto community.
Yes, obviously, Nigeria is still the biggest market for cryptocurrencies. But the truth is that most of the crypto transactions that happen in Nigeria still happen through the P2P platform, the peer-to-peer system, right? That is not really regulated. It still happens in WhatsApp groups, it happens in Telegram groups. So despite the fact that Nigeria has the volume, the lack of regulatory clarity has ensured that the government, or let me say the people of Nigeria, have not benefited from the immense benefits that could come from those companies actually having their stations in Nigeria. I even know of many crypto companies now, once they, due to the Binance fiasco, once they know that you are living in Nigeria, they tell you that unfortunately you won't be able to get a certain job. Most people are having to move to Kenya, as I said, or Ghana to acquire those jobs, and that's very sad.
So how much difference do you think this new ISA will bring, the new law that now recognizes crypto? How much difference do you see it making?
It's definitely going to make a huge difference because if you look at the current crypto statistics, the largest crypto market is Nigeria, followed by Kenya, and then South Africa. So what's happening now is that the Kenyan government are trying to make their markets more attractive. I know Nigeria will always have the edge in terms of population, right? But if you are looking at the most populated regions in Africa, then after Nigeria, the second biggest crypto market should either be Ethiopia or Egypt because they have the second largest populations. But that's when you know that it's not really about population, it's about the earning capacity and also, crucially, the regulatory framework in the country. So if Nigeria continues to lose companies to Kenya, what those companies can literally do is they base their operations in Kenya and also offer their services in Nigeria by not having a physical presence in Nigeria. And obviously, that's still going to affect the revenue coming into the country, and many Nigerians are going to lose out from not getting employment.
Yeah, we don't want that, but we hope that with the new law, perhaps there'll be a reverse of that. Thank you so much, crypto evangelist Adeni Yolo-Okporoku, for your time.
Thank you for having me once again.
That's it on the program. Thank you so much. Been a whole week of having you over there as company for Business Morning and Business Incorporated. We have the trend again that begins on Monday. But before then, I'll see you during the stock market report tonight. We hope we keep that green color to the close of trade. That'll be on Stock Market on News at 10. I'm John Mekwa. Enjoy your weekend.